As you know, you mentioned the world is watching, Secretary Yellen. There's been a lot of, I would say, politicization right now of the dollar and the fact that countries are making moves, countries like China and Russia, to use the dollar less and use, for instance, China's currency more in world trade. I know you have said that the dollar's reserve status is not at risk, but I do wonder if we make a mistake here on the debt ceiling, how that impacts the dollar's reserve status and the trajectory for that.
Well, if we were to compromise the credit rating of the United States and even worse, to default on the debt, I think that would have an adverse impact on the dollar's use as a reserve currency. The dollar is regarded in Treasury securities as the bedrock safe asset in the entire global financial system. It's trusted, and it is the ultimate safe asset. And a failure to raise the debt ceiling, impairing the U.S. credit rating, would put that at risk. So that is a real concern.
I want to also ask you about regional banks, because the drama has not completely died down, as you know. And I'm wondering how you assess the level of stress right now in the banking system.
Well, we continue to see some downward pressure on the stock prices of some regional and community banks. Their earnings are under some pressure, and I think that's part of the reason. But, you know, I would say that we had a couple of bank failures, banks that had rather unique characteristics of enormous reliance on uninsured deposits and very substantial mark-to-market hits from higher interest rates that lowered the value of their assets. That situation threatened contagion. We intervened forcefully, I believe, both to reassure deposit holders that their assets in banks across America are safe, and to improve liquidity to banks. And the banks now have stable deposits. We're not seeing substantial deposit runoff. So there are some pressures on stock prices. But our banking system is well capitalized. It has assets. It has access to liquidity. And regulators stand ready to use the same tools we have in the past if there are further pressures that arise that could create contagion. You know, the regional banking and community banking system is very important in the United States. Regional and community banks add to competition and create opportunities for lending to consumers and to businesses that their needs are less well serviced by America's largest banks. So the diversity we have in our banking system is a real strength.
But there is this nagging question, Secretary Yellen, about whether all uninsured deposits across the U.S. banking system are indeed safe. I know there's been a somewhat implicit guarantee by you and by the actions we've seen, but are you working with Congress, pressing Congress to expand insurance on uninsured depositors? Because we still don't really have a good, clear answer here.
So the FDIC recently issued a report suggesting pros and cons and alternatives. We're reviewing that, and we would stand ready to work with Congress to see if changes need to be made. But for the moment, we do have tools, other tools that we're using and can use again if we think that the troubles of any bank are creating a risk of contagion. Depositors need to feel comfortable that their deposits in America's banks are safe, and that's something we will use our tools to ensure. And I believe that there is adequate capital and liquidity in America's banking system for Americans to realistically have that confidence.
You mentioned some of the stabilizing fundamentals, and yet the stock prices, as you say, continue to be under pressure. Saw that dramatically last week. And now there's blame on the short sellers. Would you support a temporary ban on short selling of banks?
this is a matter that's up to the SEC, and this is something that has rarely been used, and when it has been used, I believe it was used in 2008, it's not clear that it made things better. It may have made things worse. But market manipulation, if it were being found that there's market manipulation, that's something the SEC certainly could take action against. But short selling more broadly, the bar is pretty high to put controls on that.
Yeah, it sounds like you're not there yet. What about the impact on the economy of all this? We've all been on watch for credit tightening. Just got a report this afternoon from the Fed that indeed credit standards are tightening. We expected that. And more interestingly, a big drop off in loan demand from banks. So I'm curious how you're assessing the economic impact of all this. Either way, it's not great for the outlook.
Well, the Fed's been tightening monetary policy and trying to tighten financial conditions. And the sluice that came out this afternoon has been showing for some time that there has been an ongoing tightening of lending conditions, and that is part of the process by which monetary policy works. But I'm not going to comment on Fed policy, but clearly this is something Chair Powell has discussed. The Fed is aware that tightening of credit conditions is something that will tend to slow the economy somewhat, and I believe they are taking this into account in deciding on appropriate policy. So, as I read it, the economy, look at the labor market report last Friday, remains really solid. In some ways, pressures are easing slightly in the labor market, but not through a process of high layoffs or rising unemployment. We have more people entering the labor force, the highest prime age worker labor force participation rate in many years. And job openings have diminished somewhat, so some of the heat's coming out of the labor market, but in the context of a really strong, solid labor market that's doing very well.
And you have pushed back against the recession narrative over the last year and a half and have been right. It's like waiting for Godot on this recession. At the same time, there is a worry that we might have a perfect storm coming together toward the end of the year of the stimulus finally wearing off, all the lagged impact of Fed tightening, and of course bank tightening coming at the same time as a result of these bank failures. So can we really avoid a recession in this economy?
Well, I've said, and I'll say again, I believe there is a path to bring inflation down in the context of a continued strong labor market. I still think that path is there, but of course there are risks. The things you cited are all risks, and can't rule out a recession, but I don't think that's the most likely path. And I'm hoping that we will be on the good path to a so-called soft landing, lower inflation, continued strength in the labor market, and I think that's possible.